Okay, yeah, this is Netflix Q1 2026 results. So if you look at the headlines, you see that the revenue side of things grew over 16% year on year. Then the operating income grew over 18% to the tune of 3.96 billion USD. There is some amortization in their content, which grew over 10% as against 16% revenue. So this is a genuine leverage. So, but let's dive into the numbers and see. Okay, this is their charts. So you see from 2023, it was literally trading flat, ballooned. This is their 1 month. So when you look at the current price, it's support as 130 buck, more than 130 buck. Then it now came down, currently trading as 75 buck. And another thing to note is that they did split before. It was trading in thousands, so it was splitted last year. It is now trading in hundreds, which made more people to participate. So let's look at the other books. There are other books. So from the income statement side of things, yeah, if you look at the income statement side of things, you see that this is the revenue in 26 was now in the tune of 12.2 billion as against 10.5 billion in 25. Then look at the expenses side of things and stuff like that and other income. But one thing to note is this other income side of things. There is an outlier here, which we are going to explain. This part of income is a one-off income that came from a deal cancellation. So that was the outlier, even though it was fizzled in with the FX gain and stuff like that. But net, the books looks good. Everything is looking up. If you look at the net income side of things, you see that it's at 5.2 billion US as against 2.9 billion US in 25. So look at the margins. The margins too. Look at the operating margin. You look at the net margin, pretty well balanced. The dilution side of things and stuff like that. So this is the income statement. Then the balance sheet. Let's look at how the balance sheet looks. So you see the asset side of this. The asset grew over 9.7% from 55.5 billion to over 61 billion. Then you look at the equity side of it. The equity grew over 17% from 26.6 billion to 31.1 billion. Then naturally also the liabilities went up. There, this is the cash flow. So you see that the free cash flow also grew from 2.6 billion to now over 5 billion. So you see how the cash flew into the business. So net, this is their book. So let's go to the summary behind the numbers. Some key things you're supposed to know. Number one is that the revenue growth was broadened out. It is not just one-off revenue. So it came across both their membership, their price increase. There was a price increase. Also, the earned revenue from ads. Another thing, the deal we told you, the outlier is a cancellation because they had a deal to acquire WBD, which is Warner Brothers. Then that's Warner Brothers, that Discovery, that's WBD, but that didn't hold. So these guys acquired them, which is Paramount Skydance, now acquired the Warner Brothers Discovery. So Paramount Skydance has to terminate the contract Netflix had with Warner by paying them off in the tune of 2.8 billion US. So it's termination free. So that was the money that flowed in. Then geographically, they classified their operation into 4 geography, which all of them grew, ranging from UCB, all these things you see, both Latin American, Asian Pacific, emerging market, EMEA, and stuff like that. These are just regional classifications. So they grew in their volumes. You can see 20%. You can see Latin America 19%, and the rest. Another thing to note is that from the balance sheet side of things, there is an 18.5 billion of off-balance sheet content obligation. So another thing to note is that they use what we call stock-based compensation, and that stock-based compensation expense is nearly doubled year on year from 72 million USD to over 140 million USD. So that is it about Netflix. So what is the playbook here? So the summary of the playbook now is looking forward to Q2 2026. Net income comparison will be the cleanest read on Netflix underlying power, because now there won't be any decancellation again, all things being equal. So we are going to see what their earning looks like, apart from the cancellation went for the med. Then that is why we said in the absence of another one-off, then year-on-year net income growth should normalize, towards the 18% operating income trend. So we are looking forward to that Q2 2026 results. So this is it about Netflix. See you on the next one.